Hello, everyone, and welcome back to the channel. Welcome to the seminar. My name is Mo, and the goal of the seminar is to help you guys understand your crypto taxes and as much information as I'm able to let you know through this. Now, let's get started. It is alive, so if you guys have questions, comments, please let me know. I'll totally answer the best I can, and we can always go from there. Now, today's seminar is very, very, very important because we live in a country where there's a lot of importance on the tax system. With currently the growing popularity of the cryptocurrencies, you guys, you need to properly understand how to handle your crypto taxes and how it's become extremely essential. Now, look, whether you're an investor, trader, or just simply curious about the implications on these digital assets, this seminar should hopefully provide you with some knowledge and some further information to navigate through this evolving landscape because it is going to consistently change. Now, let's cover some of the basics of crypto taxation and some common mistakes that I'm going to recommend that you guys try to avoid. Now, I'm not a financial advisor, but what I am trying to do is give you the information and tips and the ways that I've kind of stayed compliant within some of these latest regulations. Now, by the end of the session, the goal is that you'll have a clear understanding of how to manage your crypto taxes efficiently, at least, and confidently. Now, first, let's discuss why crypto taxes matter, you guys. As cryptocurrency transactions become more common, right? Tax authorities like the IRS are going to be paying very, very close attention to ensure that there's compliance, especially with the current political landscape. We did just see Trump in Nashville. And as you can see now, politics is entering the crypto realm heavy, right? He was at Bitcoin 2024. So just think about that, right? Politicians are making a stance and starting to enter. This guy's running for president, not like small time politics, a big one. Now, understand that because government is getting into it, not reporting your taxes correctly, your crypto transactions, I should say, accurately, can lead to penalties, fines, and legal issues that you should definitely try to be prepared for rather than reactive to. Now, understanding crypto taxes is going to help you avoid these consequences and manage your investments more effectively. Now, let's go over some taxable events in the cryptocurrency realm. One, really freaking important, buying and selling cryptocurrency. Look, you guys, whenever you buy a crypto for fiat like USD, and then there's gain or losses from that sale, it is a taxable event. Now, the difference between the selling price and your cost basis, which is basically your starting price, it's the original price that you paid, plus any sort of transaction fees, will determine your taxable gain or loss. And you need to know these things. And the point of breaking them down number by number, sheet by sheet, gives you that information, and it kind of gives you that protection from the government, right? So it's important to keep all of these detailed records. You have to think about that for any of these transactions. Label them correctly, make sure they're organized, make sure there's nothing missing, and you need to know the dates and the values, most importantly, at the time of the purchase and the time of the sale, right? Because that's how you're going to get that differentiating number, which entail you'll use to file. Now, trading one crypto to another, it's another second thing. So like even when you're like doing a swap, I believe it is considered a taxable event. So that's something to think about and process once you're doing this all day, especially if you're a DGEM, right? Now, this includes direct trades on exchanges or peer-to-peer platforms. Now, the IRS currently treats these trades as if you sold the first cryptocurrency and then you immediately purchased the second one. So those numbers and the differentiating things must be reported as a gain or a loss as well, based on the fair market value of the crypto at the time of the trade. Now, hold up. I want to figure out how to find questions from you guys because I want to get them answered. Yeah, this is the app. Oh.
Nothing so far.
Nice. Okay, good. All right, let me keep going then, you guys, because I got it written out very, very organized because I want to be clear and concise and I want to bring value and help, right? Especially because I know how freaking important this is. Now, using cryptocurrencies for the third thing, right, we got to think about is using cryptocurrencies to buy goods or services. It's kind of like the same transaction as using money, right? So if you use crypto to purchase items or services, it is considered a sale of that crypto. So you must report again any gain or losses based on the difference between the cost basis, which is starting price, and the cryptocurrency and its fair market value at the time of the transaction. This is true even for literally small transactions, such as buying a freaking coffee with Bitcoin. You don't have that labeled and organized, you're screwed. And you need to think about that once you're using these things to make these transactions happen. You're literally going against the most important part of the government, I think. Now, number 4, all right, we're at number 4, earning cryptocurrency through mining, or if you're staking. A lot of these tokens allow for staking. Well, some people do mine, right? If those two things you're doing, that is also a taxable event. Now, any crypto that you basically earn through mining or staking is considered taxable income. And this must be reported at, again, its fair market value on the day that you get it. Now, for miners, this means calculating the value of the cryptocurrency mined minus any associated expenses for mining that currency. Now, for stakers, a little bit different. Sorry, a little bit the same, but it adds staking rewards received, right? So you have to also include that into that mix. Now, let's go to number 5. That is critical. And I think people miss this a lot, but it is receiving cryptocurrency as income. So basically, if you receive a cryptocurrency as payment for goods or services, it is considered income. Right? And I say that with importance because, again, a lot of people don't think about that. And this must be reported at its fair market value at the time of receiving it. So it's really critical that that information is broken down and separated. This is literally as similar as to receiving wages in the traditional fiat currency and must be included in the gross income. Okay, then we've got number 6. Ready? A lot of people miss this. Airdrops and forks, right? Because like you're doing them so quick, you don't think you have to think about that. So airdrops and forks. Now, receiving new current cryptocurrencies through airdrops or as a result of a hard fork is also considered taxable income. Now, this also needs to be treated as the fair market value of the new token at the time that they are received. They must be reported as income as you're getting the airdrops and the forks. So it's really critical at exactly when you got it. And then we need to get the fair market value, right? So let's always keep that in mind as you're thinking about it. Next, let's go through a general kind of guide, not super detailed. It's more to it, but let's just give you like kind of a summary of how to calculate your crypto taxes. Okay. Now, first step, you need to determine your cost basis. Now, the cost basis is the original value of the crypto, including any fees paid for acquiring it. Super duper important. 2, calculate the gains and losses. Now, when you sell or trade cryptos, the gain or loss is calculated as the difference between the sale price, you guys, and the cost price. Hopefully, it's this way. It's this way. You got to be able to write that off to its cap, right? Number 3, short-term versus long-term capital gains. People need to differentiate those two things because time is also a variable within using or trading cryptocurrency assets. Now, let's think about it. Gains from cryptocurrencies that are held for more than a year are considered long-term, and are taxed at ordinary income rates. Now, gains from cryptocurrency held for shorter than a year would then be considered short term, and they're taxed at a lower rate. I feel like I'm saying it wrong. Let me say this, you guys. Short term versus long term. Gains from cryptos that are held for less than a year are considered short term, right? Remember that, less than a year, they're considered short term. And then if they are longer than a year, they're considered long term, and they're at a lower rate. Now, to report your transactions, you need to follow these general guidelines. Again, there's more to it because I'm not an advisor, but I'm just trying to give you a general summary so you can do with what you can with the information. Now, IRS guidelines. The IRS requires you to report all taxable crypto transactions. This includes your sales, your trades, and your use of the cryptocurrency. Think of it like money. That's really what it's digital money, right? So with all of those things happening, you are now required to report it because you are using it as your form, right? And then there are some forms you do need to fill out. Now, the importance of accurate record keeping is keeping detailed records of all of the crypto transactions. That includes the dates, the amounts, and the value in USD at the time of the transaction. This will make it so much easier for you to report it accurately. Okay. Now let's look at the most important part about all of this, because a lot of people have some common mistakes. Mistakes can be made, so you need to try to avoid these. One, not keeping a detailed record, right? Now, it is your responsibility, right? Under the IRS eyes, it is your responsibility. So failing to keep track of all of your transactions can technically lead to inaccurate reporting, and that's going to give you some penalties. Number two, forgetting to report the small transactions. A lot of people, oh, it's a cut. No, that is still a transaction. It is a taxable event. And even the small transactions need to be reported, right? Ignoring them can actually accumulate bigger issues over time, right? And then number three, anytime you misunderstand the tax implications, like you need to understand the tax implications of the different types of transactions, such as, again, staking rewards or airdrops. Because if you mistreat those, that's also going to cause long-term issues. And you need to, taxes is not a game of reacting. It's a game of pre-planning, right? You need to have plans early rather than the issue coming up and then trying to solve it. So I really hope that breakdown kind of helped and makes it easier on you guys who degen every day, just like me, right? Who use crypto every day. Like, crypto's now become a big part of our life, right? So when something like that enters our life and we're going to use it consistently, we have to follow the rules for it, right? I really, really do think that understanding crypto taxes is crucial for protecting not only yourself, but your investments, and then by ensuring technically compliance with the tax regulations. Okay. I hope this information helped. Let's see if you guys got any other comments. I didn't register. I'm sorry. What do we do when an exchange can't export a CVS? To put it, I stopped using Margex because of this. Well, what I've done in those cases, and don't hate me, is I would turn that information into a spreadsheet, because I actually do use Margex periodically, right? And if that's the case, I have to still get that information. So yeah, I do. Yeah, good son. I do have that. That's exactly what I do. You can reach out on the link below. All right. Let me know if you guys have any other questions. I hope this breakdown helped. And I really hope it helped you, Mr. Goodson. So don't be afraid. Let's see. No questions yet. That's okay. Well, let me know if you guys do think of anything. Always reach out below. But more importantly, I do have all the links down. And yeah, thanks, Goodson. I'm trying to think of some common transactions that I forget to even think about. Earlier I said coffee, but even restaurants. Now there's apps and programs that allow you to literally pay with USDT. So now that some people are doing that in these tax, you have to keep track of that. Some people would miss that concept because, again, it's a small food item. Crystal, Margex is actually a trading platform that has no KYC, and it allows you to use futures trading. So it is leverage, right? And I think their smallest leverage is 5%, and their highest leverage is 100%, depending on the crypto. They don't have 1 million pairs, but they've got a good amount of pairs and pretty fast and efficient. So That's what Margex is. And what Good Sun's basically having an issue is they don't let you export all of your transactions out. So that's why he was asking that question. Because again, it's a tax seminar, right? So like you need that information to use it for filing. So you also have a backup of the transactions that you did, right? Because you never know when you're going to get audited, and you would need those details to pass the audit. That's how that works. It's kind of like a business having receipts, right? Some accountants say you shouldn't. Many accountants say you should. And I'd probably trust the ones that say you should, right? Because they've either gone through audits or they've had those issues. So you have to know, right? Or they've serviced clients like that before. So I would always recommend leaning on the safer side rather than taking the bigger risk, especially if you're doing good capital movement within the crypto world, right? Especially for traveling and using it. Yeah, me too, Good Son. I really do like it. I like it because it's a light exchange, right? It's simple to use for all the plays. And remember, there's two types of margin you can use on there. There's cross and isolated. So if it's isolated, the amount you're risking is very, very specific for the loss. Now, if it is cross margin, it uses the account balance. And this is also positive because if you get paid in other cryptos or have other cryptos, and those are all through the platform, like in your login, right? Then you can use that as the margin against your position, thus giving you bigger position to play. So because think about it, if you bet $1,000 on BTC long, right, and you do 100x, that's $100,000 position. So at 1% movement, you could get liquidated. Now, if you had another 1,000, I think the percent would now give you 2%, right? If you had another 1,000 in a different currency and you're using cross margin, it would do that. Yeah, I'd love to do that here in ET network. Just reach out below. I've got a Telegram. I would totally give you a little lesson on how to just use the software. And then from there on, you just got to practice. It's my advice. Don't take big risks. Take really small risks. You got to get used to the system so you know how to use it quick. And crypto's volatile, right? Like Bitcoin moves so freaking fast. Ethereum moves fast. Here's the thing. All right, you guys, when I first got into this, it moved way faster. Now it's been a lot slower. And I think because of all the ETFs, right? With so many ETFs, there's a lot more liquidity basically holding the tokens up, right? BTC, Ethereum. That's why it's so important that Solana gets ETFs approved. So think about that. Thanks. I appreciate the sub. It means a lot. Thanks, you guys. Look, do me a favor. Click like and share, right? I've never done that on StreamYard, so this is kind of cool. Let me know what you guys think. And thank you for joining and being on the Discord. It means a lot. That's super duper freaking cool. We'll end the stream for now, and I'll see you guys on the next one. Unless anybody else has a question. I don't want to forget about any other questions. Post them. And likes, that would be fire. Well, you're Mr. Network. You're wanting to earn. That's a different answer, right? But you need to do the math on what you want to earn, and then think of the trade probabilities. Like if you're a good trader, as long as you learn Margex, you can probably make it faster using Margex than other platforms, in my opinion. Right? Simpler. And I like leverage way more than spot. Right? You can use futures or spot. Those are the two ways to trade. Spot means you have to have a bigger amount to take a bigger risk. With futures, you can have a little amount and take a big risk, but the risk could also lose the little amount. So you have to be super smart and not like you have $1,000 account. You shouldn't be sitting there putting all your plays at $1,000. That's pretty freaking stupid, right? You should do it $25, especially because it lets you leverage so much. 25 times 100, $2,500 position. You can take that position. Let's just do the math. Sorry, I really want to know now. 40 times. You could take 40 plays with the 25 at the 1,000. With the 1,000, you would take the whole play. That's a waste. Yeah, Good Son, I'm telling you, it is very, very simple to use. All right. Listen, thanks you guys for watching. I'll come up with more broken down content like this for the channel and these lives. Appreciate you guys for joining. Now, the Grody, it can be simple. It's not simple off the bat, but it can become simple. Once you're comfortable with it, it is, right? It really, really is. That's what I'm saying. You have to think about how much to like play with to get there, right? Okay, thanks you guys for watching. The sub would mean the world, and I'll see you on the next one. And I hope this information brought value to you. Oh, last thing I can say, I forgot to mention this, is dates. Don't forget, they're always due for the US April, right? And the people who have filed extensions, you still also have time. Yeah, Shiko, I can. Do you want me to make it? I can make a more detailed video and put it on the channel. Just make sure you're subscribed and you'll get the notification. All right. Right now I do the market watches, and I it's me, like I try to find exciting tokens because I'm in the meme space, right? So yeah, thanks for the subs. Thanks for the watch. I'll see you guys on the next one.